Yo, what's up, Pumptown and friends? Hope you're all doing very well. Hope you had a great, relaxing weekend. So let's take a look ski poo what's going on in the NASDAQ. Oh, we got a nice big monthly. Even got a nice big monthly count. I just gotta shut my door here. Got a nice big monthly November so far, so it looks like we're pretty dang bullish. And I mean, this is disco territory now. So, you seem to have found a low in basically this rejection block here. that's it. It's the only place. If that's the bottom, then so be it. So, take that level into the weekly chart, and you can see it just has no willingness to want to go down. So at the time when we closed this bearish candle here, we were using this as our measuring stick. Now, you see this in the 15-minute constantly, and it's a repeating phenomenon where you'll consider that you have a bearish order block. Okay, but if it's got bullish order flow, it's typically going to get railroaded by the next candle or the one after that. So we use the midway point as a measuring stick, and if you start trading above it, you just aim for PD arrays above the market. Taking those levels into the daily time frame, you can see we SR flipped that level like military grade, and we had this level on our chart here. So let's investigate here. So in the daily time frame, we have this bullish mitigation block here. That was the weekly bottom. We made the swing low in here. We made two of them really, and I mean I was kind of aiming for this at the moment, at the time, and maybe down into here. Just didn't want to do it. So that level, look at how we close above the midway point. So now we're aiming for stuff above the market because it's showing a willingness to go higher. That's just how it works. So you can have an idea of what you want to see. But the thing is you can see it both ways, and that's the problem. So although we did have a shift in structure here with a very handsome fair value gap and a breaker, look at the dynamic price run here right through all that stuff. That's order flow, and you can see it both ways. And unfortunately, this is the game we play as traders, trying to figure out what to hit, what to get in on, and all the rest of it. Thank you. I don't want to butcher your name. Like, I respect you that much that I don't even want to attempt your name. If you could spell it for me like I'm 5, that'd be cool. Paola. Paola? Hopefully I did a good job. Hi, thank you very much. So this midway point here, that was our ticket to our target here, and then ultimately aiming for the all-time high after breaching this pool liquidity and this rejection block in here. So we've tickled the all-time high. Bitcoin has made a substantial move, so I will be anticipating a bullish new week opening gap in just under an hour here. So I'm expecting a gap to the upside. What that would do is if there's any not market makers, if there's any hedge funds in here left over, they're likely going to get margin. The over positioned will likely have a margin call here. And so by gapping up anywhere, and it doesn't have to be that high, but just anywhere up in here, that would immediately just raid them. And that's kind of the idea behind CME gaps. Well, one of them. There's a couple of different reasons they're created. So what am I looking at for a bottom for the week. If we're bullish, I'm just going to assume we're bullish. Well, my first stop would be somewhere in this wick. And you know what? I just seen ICT do something called gray pools, and I'm going to try it out. So we're going to take this wick here, this wick here, and then we're going to add the midway points together. And this is called gray pool. Right there. So this is where I'm going to be looking for a bottom, our model, our reversal model in here. So let me make sure I did that right. So that's the midway point there. And I'll just take that. Oh no, I need them both. Yeah, no, that's the midway point there. And that's the midway point. That's hilarious that this candle's high is exactly that midway point, right? Totally random, but there it is. So this is our gray pool. And that he just released this on Twitter. I don't know if he did this on YouTube. I've seen it on Twitter. I studied it. I went and back tested it. It's freaking trippy. And I always wondered, remember when we would have like order blocks that weren't retested properly? You know how we'd have to like front run our entries a little bit? Or if like, because this candle closed, pretend this was a 15-minute time frame for a second. Because this candle closed so high, I'd be using this for an entry, right? But it might leave a fair value gap. So let's say it only comes down to consequent encroachment of the gray pool. That would be the next fair value gap. Holy moly, right? Because it wouldn't want to come down into here for, you know, a bullish retest. And we see this in the 15-minute as well. And we're in the weekly. Let me go and see if I can find one, so you could see what I'm talking about. Kind of like this right here. It closes way above. Now, how would you know? It's like you'd be aiming for this candle, where would you get in, right? And this one just happened to be perfectly the top of the whole order block. So, but, you know, why didn't it want to come back down for this here? You know, it's just like how do you project the next fair value gap? Well, I think he gave us a serious clue. And so we're going to study that one together. So if we're bullish, that'd be the first place I'm looking for a bottom. Now, we're in price disco, so it's going to be really tricky to find a top. Let's take this whole order block, the bodies, and we'll project some deviations above the market. So this is 1 pay the trader, and then 1.5 deviations here. So I like those levels. Let's take this order block here. See how those two levels match? I like that. So I put another line there where they're just about matched. This here as well. See how they're just about matched? So that makes sense. I'm going to take this whole entire swing as well. See if that lines up with anything. So that lines up with our level here very nicely. So I'm going to put another one. And then I'm not going to go too high because we'll just take it one level at a time kind of thing. So now I'm going to take this whole series of down close candles here, the bodies, see if that aligns with anything. Not as deadly as everything else, but how about just this block here? Not as deadly. Maybe up here somewhere, but we're not worried about that right now. I'm actually really interested in this here. So this one lines up with the other odd one. So I'm just gonna keep that one on the back burner, and then take just this candle, and that one's same thing. So we have some confluence with the odd ones, but this is what I'm really looking at right here. So let's take that from the weekly and go down into the daily time frame and go and find our kind of money printer here. Okay, now I know you're going to think that this is cherry picked, but if you go into the ICT library, I promise you it's not. Okay, we will pull from tops of order blocks or from the volume imbalances, whatever makes sense. And it might feel like cherry picked, and we do have the benefit of hindsight right now, but I promise you that this 18,272.5 level, it's not random. So I'm going to take that price swing here and come down and then match those levels. And you can see how this one here lines up very nicely. So I like that. I'm also going to take this chunk of down close candles. That one lines with the odd one. And then this guy. This one here, 4, lines up with that nicely. So everything lines up with these levels kind of nicely. Why? Because it's algorithmic. That's why. And they're lazy in their coding, believe it or not. So, 21,444 is going to be my first stop, and then maybe for the end of November be up in 22,049 area. And so what is the point of this? Well, everybody I'm going to take the low-hanging fruit here. Everybody really short on the market as far as like the whales, like the whales in the hedge funds, the ones that in the lower level bankers, the ones that the market makers are after in the higher time frames. You got to think about it, okay? You had, the swing high in the monthly time frame, and everybody knows everything about everything. So you've got the super resistance for 1, 2, 3, 4, 5 months, and look at it running for everybody who's claiming resistance and market structure shift. Trump's bad for the economy. Like he's going to crash the market even though his market's ripped. Just all the standard MPC crap that you hear everywhere all the time. So it's just counter trading all of them. All the ones who think they're smarter than everybody. It's literally after them, and it's hilarious. But anyway, need I digress. So what am I looking for? Right here, first of all, I'm taking the dark pool and I'm aligning that with something on the chart. Now let me go back here. What was this level from? So that was my projected fair value gap. I'm just going to ditch that for a bit. We have this indigo right here. So I really think that will be something. Because it could come all the way down into here if it wanted. So now go into the daily with these levels on our charts and see if that aligns with something. Well, that seems to have liked it a lot. That indigo here, we can refine this now that we are in the lower time frame to there, and then this guy right here, I would take that guy. It might be cheating. You might think it's cherry picked, but the algorithm seems to really like that spot. So I'm going to keep it. And as a matter of fact, you want to know something? You should include the whole thing of that. And look at now it's touched. And I wasn't including that in the original analysis, but if you go back in the videos, you can see that I was using this gap here and that high of that candlestick. That's what I was using originally. And now that it's passed by, I was almost right, but it wanted this gap here. So there it is. Pretty cool. I'm still learning, right? Right. So now that I'm in the daily time frames with all of these higher time frame levels on the chart, so this is supposed to be green because this was support. And I'm looking for a bottom for the week with the bias that it's bullish. So where would be a place for a bottom? Well, consequent encroachment of this level here, really any one of these levels. Okay, if we start breaking specific levels on like a 1 and 5 minute basis, it's showing a willingness to want to go lower. Okay, so it can come all the way down to this breaker here. Actually, well, I would use the top of this candle because that is an indigo as well. I've been calling them inverted volume imbalances, but I finally figured out the proper name for it. So that's the bullish breaker. And now we have, since this candle's closure here on Thursday, a fair value gap. This was the bearish breaker that was broken, so I'm going to take that off the chart. And just for visual reference, I'm going to take this volume imbalance and this candle's high here, and I'm just going to have this in the back of my mind that this is an inversion fair value gap. I'm going to note the top of it is in the lower quadrant of this fair value gap. Okay, so it's in the discount of the bigger fair value gap here. So I will permit price to come all the way down to here if it wants. This week could be bearish, and then we could flip out for the next 2 weeks after. But we'll know. It'll be obvious. So that one I'm going to take off. I just don't want too much on the chart. And that's about it. So let's just cross-reference this with the 4-hour and see if we can get any cool information out of here. Well, it's doing that weird thing, right? It was supposed to be a rising wedge that breaks down. Well, it started breaking down, and then it ripped in their faces. And we were considering that to be a market structure shift, but it's showing a willingness to go higher. When you're in the 4-hour time frame, you can actually see that, yeah, okay, this thing is like, you know, it's going to do basically what Bitcoin did. You know, it tickled the all-time high for a bit and then just started snapping for it. So we'll see what happens, but this is kind of what I'm looking at. No real heavy Fed folders until the end of the week. So it's and we got a banking holiday tomorrow. So chat disconnected. Please wait. Oh man. It was looking so good. Anyway, banking holiday tomorrow. Take the day off. Do not trade. Okay? Do not trade tomorrow. It's a banking holiday. It's a rule. Even if it moves so violently and so perfectly and everything's perfect, then study it. Okay? The worst thing you can do as a trader coming up is trade on the days and win when I tell you not to. Okay? You might not think that at the moment, and you might just think I'm absolutely cooked, and that's fine. But eventually, you're going to get sick of your own ish, and I'm going to tell you these same things for a year from now, and it's never going to change. Okay? Don't trade banking holidays. At the end of the week, we've got high probability news drivers that will likely want to push price in whatever direction. It's not like we're not going to see it coming. So don't worry. Don't panic. Don't trick yourself into thinking, oh, it has to move now. And, you know, all these negative worries that plague us as traders. None of that matters. Our model is perfect or it isn't. God bless you. Thank you for joining. And we'll see you tomorrow. Peace out.